Good evening, everybody. Yeah, I guess the East Coast is starting to get a little bit of rain over there. Yep, that's a nice, fun car in the summertime. The only problem is the roof is stuck halfway up and the battery is dead. So that's my project when I get home. All right. Dow Jones Industrial Average. Kind of the point of the newsletter this afternoon is notice how we're getting down to support levels, either here or possibly here, with stochastics getting in the oversold area. Most people don't know when to grab for the fallen knife. And what candlesticks do is give us the indications, the signals of telling us when the selling might be over. Now, the reason we don't think was at an exact bottom yesterday and starting today was because our stochastics hadn't quite gotten to the oversold area. The best place for a reversal, obviously, is when all your confirming indicators are confirming. So we're now getting into where we're in the oversold area, about the same level. I wouldn't be surprised if we open up weaker tomorrow, they spike it right down to test the 200 and bring it back up as a hammer type signal. Then they've got the fear of it going down further out of the way and start bringing it back up. Now, at the same time, the NASDAQ did a doji the other day, tried to come back up and couldn't, tried to come back up and couldn't, and still bobbing right here on the 200-day moving average. Stochastics in the oversold area. Probably going to bob here for a little bit, allowing the Dow and the S&P to get their stochastics into the oversold area. I'm suspecting the S&P is going to be bottoming here fairly soon, probably right in this range. So why go through that analysis? Because if you're setting up your portfolio, deciding whether it's time to start covering short positions or adding long positions, knowing how to analyze what the market trend itself is doing is very important. For if we know that we're trying to bottom and we start seeing some potential buying in some of our short positions, we may be a little bit more apt to cover those positions versus if the market was still going this way and the positions were showing a little bit of buying, we might not be as anxious to go ahead and cover them because everything wasn't lining up properly. All right, let's run through some of the commodities real quick. Crude oil, wave 1, wave 2, wave 3. I think we're still, notice our stochastics aren't quite in the oversold area. Still think we could possibly hit $80 a barrel. Let's see. Sugar. Notice the doji gap down, and then it can't get up above the T-line. And notice what we did today. Right here on a support level, it did kind of a left-right combination. So that gives us some information, because we know the left-right combo is excessively strong, which means if they open this lower tomorrow, they're breaking this level here, we might be in wave 3 of this down move in sugar. Let's see. Corn is not doing a whole heck of a lot, except it's getting ready. Let me make this a little bit bigger. Kind of got a support level here, but notice how it's rolling over again. Whoops. And we've got that doji lower open, below the T line, stochastics heading down. I would suspect there's some more downside. Now, wheat, on the other hand, is caught in the middle of this trading range. It's hard to, wheat has been just unexciting. So anyways, in soybeans, that seems to be having a little bit more bullish reaction, coming off of kind of this little buying right here. Appears to be pulling back to the, let me make this bigger so we can all see it. I would suspect they're pulling this back to the T line to do a kind of a double doji day and then take it back up. On wheat, yeah, that's a long, but here's the other side of the story. You don't want to be trading wheat right now, but if it broke above this level, you'd want to be in it with both feet. That would tell us that after all this long consolidation, they've told us which way they're going to take it. Let's see, cattle broke down today. Again, when it came back down through the doji and the T line, it was time to get out of any long position that had the possibility of doing a J hook.
YMV 12, 125.
And I have bought some
3 EM.
hogs.
Below 8 EM. Do not be long. YMV 12.
Up, came through the 50, pulled back to the 50, came back above the T line. Where did it go to? To the 200. Got to the 200, it's pulled back, kind of doing another J hook in here, should push right back up through. Very simple as far as a stop loss, buying right here with the anticipation of the next move up. If it came back and closed below this candle right here, you're back out of it because that's not the definition of a J hook. What level were you speaking about? Oh, just above the this trend line or this trend channel. See if I can do this. And if it kind of broke through this level, you can see we've got essentially kind of a trend channel going on here. If it broke through the upside or even the downside, it's going to go for a long ways one way or the other. All right, let's see, what else are we looking at here? All right, what we're going to get to eventually is kind of concentrate on the benefits of a doji sandwich. But before we get there, let's kind of look at a few that we're holding on to. Again, we want to be able to have the visual capabilities to see anything that puts the probabilities in our favor. For example, it's not too difficult to see in this chart, well, we've got a wave 1, a wave 2, potentially a wave 3. And where's wave 3 going to be able to start? If they could break it out above this little resistance level. Why would they do that? Because we've got a doji gap up. Now if it traded positive, it'd be above this level, coming off a very strong bullish signal. That would be a good probability you're now in wave 3. You want to be buying. Now, that's one of the mines. And the mines are getting some strength, which we'll get to here in a little bit. In the chat room, it was a David L. I forget who was bringing up XRTX. Just a nice rounding bottom, fry pan bottom. It looks like now it's starting to break out. Now, here's part of that, what I call the doji sandwich. Had a bullish day. Had an indecisive day right smack dab at the same level where the gap was. Made this very simple. Either that was going to be the resistance level or that was going to be the breakout level. And because of our simple rule of the doji, when it opened positive, we should have been buying immediately because it was going to come up and fill this gap. So far, there's nothing yet to tell us that this might not come all the way back up to the 50-day moving average. Now, I illustrate that because this chart had everything going for it ever since it broke out above the T line to tell us that all the indications that we're familiar with candlestick analysis is telling us we're in a bullish trend on this stock, and we know to continue to hold it until we see a sell signal and a close below the T line. Now, if we start getting up here and our stochastics are in the overbought area and the T line hasn't caught up, we change our stop loss. We change our stop loss to the shouldn't come back below the open of the previous candle. So very simple rules of candlestick analysis, and that's why I added the comment in the tonight's newsletter to say that, I hate to say how many years I've been investing, but I've never heard a professional money manager tell you how you cut your losses short and let your profits run. They always tell you to do it. They just never tell you how they do it or how it should be done. Candlestick analysis has very, very simple techniques and rules to take care of that situation. RNF, we recommended it a few days ago. Notice what it's doing. It's every time it pulled back, it was very indecisive. Now we've broken out on a little doji gap up type situation. They used the T-line and the 20 one more time for support, broke through this level. I'm thinking you're starting wave 3 on this one. All right, some other good ones that we get in the chat room each day. KIOR, Morningstar type signal. And this puts all, again, the probabilities of being in the right place at the right time in your favor, because notice what happened after a Morningstar signal. What do we expect after a Morningstar signal? We want bullish confirmation. We're coming out of a oversold condition, Morningstar signal, closes right here near the T line. The next day it opens above the T line and starts going positive. What's that tell us? It tells us that they are confirming the Morningstar signal, and they're confirming that they're not going to be resisting at the T line anymore, and stochastics are telling us that now we're starting to head back up again. Where's it going to? Even if it came back right up here, you've still got a 15-20% return, and possibly could go higher. Yes, we did. We'll get to the each one of these as we go through. Now I'm just running through some that have good-looking charts. Now this one had a good-looking chart for some reason. What was I looking at this one for? That was a different-looking chart apparently on TCNet. But I would look for positive trading in this one. For some reason, that's not as good looking as I intended it to be. Here's a good one. LQDT, kicker signal in the oversold area up through the T line. No problem with buying this one. Where's our first target? The major moving averages. Where's our stop loss? It shouldn't close back below the T line. This one probably has a good option strategy to it. But whenever you remember, candlestick signal in the oversold area, gapping up is your best friend. This is going to be a good friend. 8. Another one. It has a little scoop pattern. Remember, if you can recognize a pattern, we know what's going to happen after patterns because we know what the results of pattern setups are. Scoop pattern, hammer, gap up. Another gap up through the resistance level. This is a scoop pattern that's breaking out, and we know the results of a scoop pattern can be pretty strong. It's just that slingshot effect coming out of this side. That one's one that I wouldn't be afraid to be buying on positive trading. Number one, it'd be confirming, obviously, the scoop pattern. Number two, it'd be breaking out through this level. So you put your stop loss. It shouldn't close halfway down this candle. If it did, that's bringing us back into the trading range, tells us there's not as much strength there as we'd like it to be. DDD. There's your best friend. Doji, gap up. You want to buy this on positive trading. Probably do not want to see it trade back below the open. Yeah, looks like it was KIOR. Whoops. Yes. All right. Now, TEN, kicker signal. Wouldn't be afraid to be buying this one. Anytime I see a kicker signal, I want to be a buyer. If I had 10 kicker signals to put in the portfolio, then I'd have 10 kicker signals in the portfolio. They're the strongest. KIR, low volume stock with good concept. Turns pine tree waste into fuel. All right. Thank you, Pat. Probably I could use it because I've got the darn pine tree all over my car. Another kicker signal, breaking out into new territory. AEM, one of the mines. And the mines have been acting strong. SISL, the bigger the signal is, the more compelling you're going to be in a reversal. So when you see a big candlestick signal like this, notice what it did, kind of tweezer bottom, both the lows on both days, exactly the same, came back up. This one you definitely want to be a buyer on positive trading. Very simple. Don't let it close back below the T-line. Yes, Henry, we're going to go through a doji sandwich. We got a bunch of them. That's going to be the kind of the topic for tonight. SSYS, obviously in an uptrend. Now you've got a doji gap up. That's your best friend. Got pretty much kind of a fry pan bottom setting up. This one's in an uptrend. You want to start looking at price and call strategies. Maybe a November 70. Buy the November 70, sell the 75. See what type of spread that gives you. When another kicker signal. Notice where the kicker signal started. Bouncing right off the 200. Now we're back up. We've got a kicker signal breaking out through the top, breaking out through this level. And if it opens positive, it's breaking out through this level. Tells me if this is wave 1, wave 3 is just starting. Another one to buy some or put some call spreads on. Another kicker signal, SCI. Okay, both in 3D printing. All right. Thank you, Pat. Yes, I did see on one of the, I forget what station it was, doing showing different technology where, forget how they did it, but you can put a somehow the formula of a piece of whatever you're working on in the computer, and it will print out, or it will carve out a exact replica, I want to say prototype of that. So, I mean, that. So, I'll get on my soapbox here for a minute. Years ago, when we had the big bust in the market, and they said the technology revolution was over, I kept telling people, no, the technology revolution is just beginning. The stock prices got ahead of themselves. When I was a stockbroker with Kidder Peabody and Cowen and Company and Oppenheimer back in the mid-'80s, one of the stocks they were touting, one of the guys was touting, was one where you could put for example, a car up on the screen and do your design, and then once you got done with that design, you could turn that car in any direction on the screen that you wanted to see what that design or what it looked like from every direction, from bottom, top, back. I mean, you just spin it around any way you wanted to. And that technology cost hundreds and hundreds of thousands of dollars. And I forget what the company was that did it. But, I mean, they were pushing that stock pretty hard. my Sandy's son-in-law is right now working for putting books on iPad, and he showed me the other day where he had he's a minister down in Corpus Christi, where he had put up on the screen a picture of the Ark of the Covenants, and then with his finger he could move it around so you could see it from every angle. So what cost hundreds and hundreds of thousands of dollars 20 years ago, 30 years ago for that type of technology, now you get it for free, putting it on iPad. So anyway, that's kind of just anyways, that technology, I think, again, we're in a stage of technology where it's just leapfrogging on itself so fast. We can't even imagine what we're going to be looking at 1 year from now. Intergraphics, that was it. Yep, thank you very much. Can we see the technical settings again? What technical settings? Oh, on here, is that you need the moving averages? For all you new folks, the moving averages on here is the 200, the 50, and the 20. These are all simple moving averages. And the reason we have those is because that's what all the major money managers around the world use to make their decisions. The black one is the T-line, which Rick Sadler developed. He was one of my first private training students. We went back to Anchorage, Alaska after we sat in our butts for 2 days, teaching him everything about candlesticks. And a few months later, he came back up with the T-line, and that's been working very successfully. Okay, Jim, you've got those settings. You mind reposting them? I don't use I use the 34 exponential moving average on my commodity trading, not so much on the stocks. Oh, okay, yeah. Click on announcements and you'll get all those settings. All right, let me zip right along here. Veil, kicker signal. Positive trading is going to really bring us pretty much above this downtrending channel. Las Vegas Sands, kicker signal, bouncing off the 50 a second time. After hitting the 200 once, more than likely they're going to go right up through the 200. GR Grace, or WR Grace, kicker type signal, breaking out into new territory. Now, this is at the top of the trend channel. What's the difference? Because we've got a lot of juice left in the stochastics, and we just did a kicker signal. That should take us much higher. And ADTN, look at this one, a fry pan bottom / scoop type pattern. Is this worth buying right now? Well, it's in a fry pan bottom, which means it's probably not going to have a real fast move up here. But even a move from here to here is about 2.5 points on a $16 stock. That's still about 15%, just to get to the point where if it breaks out, it's going to be big time. That's your fry pan bottom, UCBI. Another one that's moving sideways, wave 1, wave 2. Now notice we got buy signals right here on the 50 and strong price move. We're sitting right here at the resistance level. Now the reason I show this is it is setting up for a high probability situation where if they break this out, we're in now an area where it's going to run pretty strong because there's not going to be any resistance for quite a while. So this becomes a very good trade if it opens positive because you've got strong buy signals, you've got a lot of juice left in the stochastics. That could be a good 15, 20, 30% move from here. Hold on to your individual stock selections. I'll get to them when we get done, and you may see a lot of them before we get done. SEM, notice the scoop pattern. Again, another reason for going after the patterns versus just uptrending stocks is we know what the reaction is from patterns. They're usually a very strong price move. So this one had a little gap up through the T-line today. If it keeps moving and breaks through this level, you could have a good, strong 30-40% price move, because what makes this any stronger than any other bottoming? The fact that we see a long, flat handle for a scoop, and now all of a sudden the enthusiasm's coming back into it, and it's usually a lot stronger than after everybody's gotten bored sitting in that handle for a while. Same scenario on UNTD. Flat, 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 came right back. Where did it support? Right here on the 50, starting back up. So if it breaks out through this level, you've got a potential of a good, again, 20, 30, 40% move to the upside. EVEP is kind of that doji sandwich, but more, in this case, a hammer off the 50. But notice where it's trading right now. If it opens positive, where is it going to be? It's going to be out in the new territory, coming off kind of a cup and handle setup, bouncing off the 50. Stochastics heading up. Again, we're trying to find as many probability situations that tell us we're in an uptrend and into a breakout area as possible. And that's all based upon the visual characteristics that we see in candlestick signals that tell us that where the energy is coming from and what type of signals are is causing them to start that next move to the upside. Let's see. DCIX. Fry pan bottom breakout. Now, why is this a breakout? Because notice how it gapped up. Notice how things starting to pick up energy just at the place where this pattern started. Where's your logical target? The first target is probably up here at the 200-day moving average. And AVT, gap up doji. What do we know about a doji? Very simple. If it opens positive, you want to be buying immediately. So, again, where's this very simple concept built into candlestick signals? Where do most people sell? They panic sell at the bottom. That's where you start watching for your buy signals. Again, when I was one of the worst investors in the world before candlesticks came along, I'd be selling down here, and then it would all of a sudden start going up, and I'd sit there banging my head on the desk saying, how the heck could I be the one selling at the absolute bottom? And then they'd take it right off without me. All right, for long-term as well as short-term investors, Ford Motor Company. Came up, moved sideways, had a nice doji, gap up. We're just about at a breakout level. If it trades positive tomorrow, you want to be buying with the anticipation that our first target is going to be the 200. If they get it up above the 200, you're probably going to see a lot of institutions coming back into Ford Motor Company. All right, the doji sandwich. I guess I should have had some illustrations. The doji sandwich is a big candle day followed by a doji. And we just got some very simple rules of a doji. The next price move is usually going to be how they open it after a doji, which means if they open this lower, they're going to be moving in this direction. How big in this direction? Usually this candle right here tells us the magnitude of the next move to the downside, which does two things for us. One, first of all, let's say we see the markets opening lower tomorrow. It doesn't matter so much with natural gas funds. But let's say we see things opening lower. We can short immediately. We don't have to wait for confirmation of any sort because we know the simple rule that if it opens lower, they're going to be moving in this direction. If you're a day trader and it comes right down here quickly, same magnitude as that, you know when to take profits and move on to the next one. A longer-term investor, a swing trader, you know when you put that position on, you're probably going to be profitable right from the get-go, and you're much more comfortable hanging on to that position for a while. So we see situations like this. And let me see if I can find a darn one that, no. Oh, saw. There should be at least one here that I had that was a finished S.CFL. Wow. Okay, here's one right here. Bullish day, a doji type day. If they open up positive, you want to be buying immediately because it's going to be moving in the same direction as they open it. Now, in a case like this, what do we have here? We have a piercing signal. Then we have a doji. Stochastics is starting to come up. They open up positive the next day and start immediately moving up positive. That tells you it's time to buy because two things are happening. Number one, it's breaking through the T-line, and number two, it's breaking through this downtrending channel, and it did it with a gap up. So that tells us this downtrending channel is not going to act as resistance. So I'll get back to this chart here in a minute. But anyways, okay, no, that's not what I want. NUGT. NUGT. All right. We know what should be happening here, or what can be happening here. So we've had a down day. Then the next day they gapped it up, and they opened this right about the same level they opened it the day before and did a doji type day. If they open this positive tomorrow, a couple things are happening. Number one, it's going to move in the direction of how they open it after a doji, which means that should take it positive. Number two, that would create a flutter kicker signal, which is very strong. Number three, they'd be breaking through the T-line. So the only remaining obstacle from that point is to break through this downtrending channel. And when they do that, especially off a strong signal like a flutter kicker signal, more than likely you're going to be in wave three. So these are all reasons, or you're trying to add as much reason as you can to each time you put on a position. What did I do here? So here's a situation where we kind of had this was more of a doji day on TCNet, but a left-right combo, bullish engulfing signal, an indecisive day, then they gap it up. Again, that tells us that we've still got a very strong move. We got stochastics telling us we're still in an uptrend, and we broke out through this resistance level. So these are all kind of confirming strong trades. RCI. This is why anytime you see a gap up and you see a doji, the gap up is your most important information that you want to know. Notice we came off some spinning tops right off the 50, gapped it up through this level, have kind of a little scoop pattern. So yesterday, when it closed way back down here at the bottom, there'd be people saying, oh, man, what's happening? Well, as soon as we saw it opening positive, we know they're going to move it in the direction of how they open it after a doji. It tells you it's time to be buying. This told you the bulls and the bears were fighting. When they open up positive the next day, that tells you the bulls won. Yes, Henry, I will get to those too. Yes, I thought I would. Axe. Axe has something in here. Oh. Down day, we're down below the T-line, a little doji. If this opens lower tomorrow, you definitely want to be shorting it because they're probably going to take it down here. They're going to be failing this level right here. Stochastic still heading down. So a lower open on this one gives you a high probability. Do you follow the theory retail is open and pros are closed? No. I don't care who is buying or selling after a candlestick signal. It could be somebody's little old grandmother buying. I don't care. They're adding supply and demand. And if I see a candlestick buy signal and they're buying the next day, I don't care who's doing the buying. for the selling. There's your pure doji sandwich. Big bullish day, a doji. Makes it very simple. If they open a positive, you want to be buying immediately because this day right here will probably be about the same magnitude as this day right there. Now, stochastics coming up. Where are we sitting? We're sitting right here on a resistance level. After a strong buy signal, if they open this positive, you can still be buying because now you've broken out into new territory. It's going to be moving up a lot more. That's right. ANR was a perfect doji sandwich last week. I think there was even a couple times where it was a perfect doji sandwich. Bullish trading, bullish day, a doji. Open up positive, big day. A few days later, look where it resisted, right here at where it resisted before. Then we had a doji, right here where it resisted before. It opened positive the next day. What did that tell us? That people didn't care about the resistance level. After some consolidation, we still had a good move to the upside. Now look what's happened on the downside. Bullish candle. A gap down below the previous day's open and did a doji, and then goes this way. That's a strong bearish flutter candle.
YMZ12.
That's
Price
why
below
we had that on our recommended list to short it
YMZ12.
on weakness today because that's telling us there's a lot of force to the downside. So if you were looking at this chart, where do you think your target is? Well, you can pretty much, I think I can do this without goofing up too badly. Maybe not. Trend channel. Let's see, how do you do this? You put that one up there, you put this one in here, your trend channel back down here. So at least if we're short, we know what our parameters are. You stay short, we start looking for buying down in this area someplace, and it shouldn't close back up above the T line. If we do, we close it back out. Again, the reason I'm stressing the doji sandwich is because it gives you so much more probabilities because you can start adding everything up. Down candle, a gap up above the previous day's open, does a doji. MGM, if it opens positive tomorrow, you definitely want to be a buyer. Where are they probably going to take it? You can see your trend channels right up through here, so probably your target is going to be up here at the 200-day moving average. Casey. Well, how'd that get in here? But it's a good-looking chart anyways. Doji. Gap up. This one you probably want to take a look at. It's probably going to head right up to the moving averages right here. So if we know our resistance is up here at 55, we might start looking at see if there's a 52-50, 55 spread, or even a 50-55 spread. See what that would what that would do for us. That is not the axe you wanted. That's not the axe I wanted. Let me see. You're probably right. S.AXE. That's probably the axe we wanted, huh? All right. Left-right combo. Indecisive trading day. Doji. Gap up positive. Coming out of this rounding bottom. Wouldn't be afraid to be buying this one. Thank you. Okay. EZPW. Nice little rounding bottom. Let's see. This one has a reason to be in here, and I don't know what it is, so we'll discover. This is just, I guess, a nice looking chart. May have been this little doji in here. That tells me they're probably taking it back up to the 50. Why that one was there, I don't know. All right. Now, stocks as well as Natural gas, for example, as we saw in the UNG chart. Down day, bearish engulfing after an evening star signal. Down day, if this opens lower, where are they taking it? They're taking it lower. Where's the first probable spot? Down here to the 50. So if you're trading commodities, this is probably going to be a high probability short on weaker open tomorrow. Same thing with cocoa. Came up. There's that kind of a flutter kicker to the downside. Big down day. Doji. If this opens lower, no, at least the 50 or the 200 will be the next target. But notice what it's done. Came down, hit the 200, bounced up to the 50, failed the 50. If it's supported at the 200 the first time and bounced up and failed the 50, where do you think they're going to take it? They're going to take it right back down through the 200. Zero options volume on KC. Bob, that's all. I'm just picking out the charts, not picking out what might be good for somebody depending on what they're trading, which gives me a good lead-in for this weekend. This weekend we're going to be doing an hour session, which will probably extend into 2 hours usually, on scanning techniques. Now, what I've discovered is I've got enough information to fill up 2 hours, so it's going to be the basics. So if you've seen it before, don't get discouraged. I'm going to start with the very basics, which is just showing you how to do the formulas, what formulas to be looking for, how to apply them, how to do your cultivation out of 7,800 trades, how you cultivate that down to the two best 2 or 3 trades each day. On top of that, we will be doing our kind of a quick analysis of how do you analyze whether you want to be long or short in your portfolio, which is obviously analyze what the markets are doing. But because we've got so much information on the basics, it starts at 11 o'clock on Central Time, so that the East Coast or the West Coast people can get up and watch also. So it'll usually go for maybe an hour and a half. So it'll be a lunchtime thing where we'll take a break for lunch and then come back. But what I'm planning to do is I'm doing I've done the scans for the most basic of TCNet, which is the TC2000. I'm going to try to have, in the next couple of weeks, have Michael Thompson from Warden Brothers come and do scanning techniques for the new 2012, which I have been derelict as far as learning it myself because I've got everything set up as it is. But from what I understand, 2012 has so many more benefits to it. I should be looking at it. I'll have Jeff Gibby come in from Metastock and do the same thing where we can do the advanced scanning. So instead of people sitting and listening to how you set up a scan for this service or that service during the Saturday, we're just going to do the basics, and then we'll start bringing in people to do more of the advanced on each specific charting software. So anyways, yes, that's what I understand. The 12 is very, and as I say, I've had 12 on my computer for months. I've just never taken the time to work with it just because I've got everything all set up the way it is. All right, so let's get, so where were we? On cocoa. If cocoa opens weaker tomorrow, I suspect it's going to go right down through the 200. So that's going to be one of the trades that I do on a commodity basis. Now, the golds have been setting up very nicely. There's, again, that flutter kicker potential. Opened here, closed here, gapped up above the previous day's open, did a doji. Now, if it opens positive tomorrow, what do we got going for us? I will try to get Thinkorswim. I've been trying to work with Thinkorswim for a while, and yeah, and I'm getting things set up for Ninja Trader also. Okay, thanks, Robert. And that might be a session. We might even do that on a weekend where we come in for a couple hours, and everybody that knows how to use the different techniques, I'll give them control of the screen and let them show how to use each one. TradeStation, I don't know as much about, because TradeStation is a much more less user-friendly process. Let me get zipping along so we can get to the shorts here pretty soon. But the golds, here's NGD, Flutter Kicker, which has a lot going for it. We know that if it opened positive, we're going to have a Flutter Kicker signal, very strong, number one. Number two, we know it's going to break through the T-line, which means that's a resistance level out of the way. And number three, if we got a good strong move, we're going to be breaking out of this little downtrending channel, hopefully starting wave 3, bouncing off the 50-day moving average. And ABX, same scenario, that Flutter Kicker. If it opens positive, we're through the 50. Again, this makes it very simple. You don't have to even think twice that if they open up positive off a Flutter Kicker, this is AYU, that you're probably going to have a very, the probabilities of having a positive trade is extremely good, and a probability of having a strong positive trade is very good. That was AYU. Ego was the same situation where it gapped up today, had been short, closed out the position. Now it's got a doji. If it opens positive, we've got a wave 3 going. Yes. If it opens positive, very simple, it should be going this way. That's what a Flutter Kicker tells us. If it came back down through this level, you close out the position, because that tells you the Flutter Kicker is not working. Close out the position immediately. All right. Shorts. This is what we're essentially looking for. Is that failure of the T-line. Notice we had a left-right combo that was closing below the T-line here, and then look what happened the next day. They just slam it. And this is, I'm showing this, not that we were in it, but this is a very typical high probability trade situation. Jim, what was the question on Flutter Kicker? So we had a left-right combo right here. What is it? A Flutter Kicker is, you have a dark candle. Now, remember, our kicker signal, let's see, we had a bunch of kicker signals, right? LQDT. Okay, LQDT, a kicker signal is when your last day in the downtrend is a dark candle, where they open it here and close it here. A kicker signal is where they open it at or above the previous day's open, and they immediately start going this direction. Tells you the investor sentiment has been kicked in the other direction. That's your strongest reversal of all the candlestick signals. Now, what were we just looking at as a Flutter Kicker? That's just mine like a sieve. What were we just looking at as a Flutter Kicker? Oh, the golds. All right. All right, so here's what we have, is we had a big down day, closed down here. We had a doji that gapped up right about the same level that it opened the day before. Now, if it opens positive, we know the simple rule of a doji, that the prices will usually move in the direction of how they open it after a doji. So if this opened positive, it's probably going this way, which means if you took this little doji out of here, you'd have essentially a kicker signal. Now, why does that make, why is a Flutter Kicker somewhat better than a kicker signal? Because if a kicker signal occurs with a gap up and starts moving, you're chasing it right away, trying to get into it. A flutter kicker is all set for you. We already know what should happen with a flutter kicker. We're going to get a strong price move. So if this opens positive, we don't have to be chasing it. We're buying immediately. We've already got our funds established and what we're going to do with it. The Mariposa, not necessarily. You shouldn't have a candle to the downside of the new. Which one did we look at? Yeah, you shouldn't have any candle down here, but you can. I mean, it still represents the same thing, that if it opens and you get a small shadow down here or a small wick, and they take it this way, you can analyze the same thing, that they were going this way and then they kicked it in this direction. Usually it opens and starts moving right up. That's your strongest kicker signal. But don't disallow or don't negate a signal just because it has a little shadow before it took off. For futures like TF, is a flutter kicker applicable at 9:30 market open? Yes, if it's a positive after a doji. I'd have to see more of what the chart you're looking at. Okay, we're supposed to be looking at, all right, this is what we're looking for on shorts. There's a left-right combination. These are the ones I want to find where they're rolling over and they do a sell signal right here below the T line. This is what you not expect, but got a high probability that they're pulling the plug. CRR. All right. I'll take a chance. And yes, that's a kicker. Even though it's got a little shadow right here, still represents the same thing. They were going this way and they gapped it up and went this way. That's a good looking chart. NYT. Same scenario. We had a doji right here on the T line. Now this is why knowing the simple rules of a doji is important. But if you see a doji right on a specific technical level, one or two things are going to happen. If they open a positive, they're taking it back up, supporting off the T line. If they open it lower, that means the T line is not acting as support. They're going lower. So, and if you have a doji gap down, remember, that's your best friend. Are you always going to get a big percent move like this? Not necessarily, but the probabilities of being in the right trade at the right time is immensely bigger, knowing what should happen after a signal. Do you pay attention to volume with doji? No. Volume does not, you're not buying volume. The only thing that volume does for you is if you happen to see a big volume day on the day before, or day after a candlestick reversal signal, that basically tells you that a lot of the weak have sold into the strong or vice versa. And it's just an added fluffy that there's probably a lot of new owners of that stock, or if they're selling at the top, that a lot of the smart money has gotten out of the trade. Do you buy immediately on the open for a kicker or wait? I usually buy immediately, but to wait mean I can wait 15 seconds, 30 seconds, 45 seconds, seeing which way they're moving after they open it. And a stop, yes, I'll probably use something. Now, remember, if they've kicked it in the opposite direction, that means there's usually a lot of new buying force going up. Very rarely, and that's why we use the signals, very rarely will you see it turn around and come back down again. Again, here's that a doji closed just below the T line. This makes it dangerous to hold on to something as it closes below the T line. What's the fear of most people? Oh, that they sell it right here and it starts right back up again. If it closes below the T line, close out the position. The worst case scenario is you have to pay up a little bit for it as it goes back up. But I would rather have the insurance of being out of a position that has closed below a high probability support level than hold on to something and have that happen. I'd rather be short if it closes below the T-line. Oh, let's see. CLF rolls over. There's your left-right combo that closes just below the T-line. Gap it down. I would be shorting this one tomorrow on weakness because if you've got a gap down from a left-right combo, which is a very strong sell signal, if it opens lower, what's it doing? It's breaking this level right here, telling me that they're at least heading down to this level. And BDY. See how it rolled over? Then a doji gap down. That's when you want to get into these because they're, even though it's just like a fry pan bottom, except opposite, where does everybody start panic selling? When they get down to the oversold condition. RAX would be selling this one. Notice how it can't get back up above the T-line, and it didn't hold the 50. Where's our next target? Probably down here at the 200. So if this one opens weaker tomorrow, you can be shorting it. ESI. What's happened here? Who wrote that one? S.ESI. Another one that's just now breaking down. Where are they going to start panic selling? At these levels. So this one, if it opens weaker, very simple. If it opens weaker, you short it. You don't want to see it. If it's shorted, it should be going this way. You don't want to see it come up halfway up that candle. That tells you there's buyers still around. I'm only using daily charts just for illustrations. We could change these charts to anything we want to. They trade just as well on. I mean, you can trade these just as well off. In this case, that's a 10-minute or a 15-minute chart. I trade my commodities off a 10-minute chart. Let's see what. I don't know if I've got one that I can illustrate clearly. This is a 10, but on a 10-minute chart, if I've got something like this where I've got a Morningstar signal closing above the T-line, I'll start buying. As long as it doesn't close below the T-line, I'll stay with it. Whoops. All right, let me get back. So these charts work just as effectively on the 1-minute, 3-minute, 10-minute combination, which I used for trading E-minis, as they do on the daily, monthly, and or the daily, weekly, and monthly if I'm looking for long-term picks. Here's that flutter kicker potential. Notice we opened here, closed here. Today we opened at or below the previous day's open. If I make this big enough, we can all see it. Here we go. Kind of did a doji type day. So if this opens weaker tomorrow, that tells me there's going to be a lot of strength to the downside. Now this is the dust. That's the bearish miners, which means all the miner stocks are going to be moving positive, or they will be moving positive. Here's a left-right combination. If this one opens weaker, you definitely want to be shorting it. This tells you they hold the plug. FAF, bearish engulfing, right on the 20. If this opens weaker, they're taking it right down to the 50 and maybe even lower. VRA, hanging man, bearish confirmation, a close below the T-line. Short this one on weakness, use the T-line as your stop. AFI made a lot of money for us on the way up. Now notice what it's done. A little hanging man, close below the T-line. Can't get back up above the T-line. Now we have a left-right combo. If this opens weaker tomorrow, you want to be shorting it. And just a few more. FSL. Another one that's rolling over. Close just below the low here. So if this opens weaker tomorrow, they'll be pulling the plug. And FDC. Oh, that's stuff. EC. Bearish engulfing, there's an evening star signal. Tried to bounce back up, bearish engulfing. This is telling me the bears are starting to take control. Today, they closed it below the T-line. If they open this lower, look for them to bring it down to the 50. Okay, all right, we'll do individual stocks here in a minute. So that's about all I have tonight. IBM looks like it's trying to bottom. Did a bullish doji harami, which tells us if it opens positive, you can start buying. And where do you set your stop? Right here. It should not come back down below that harami. Hold on to your individual ones. Okay, Martin, thank you. Let's see. M&M, I'm sorry, I meant to show this one. We recommended M&M today because look what it did yesterday. Did a kicker signal. We'll probably be re-recommending this stock because look what it did today. Came right back down, tested the T-line, and closed up here as kind of a dragonfly doji. Stochastics heading up. What's our rule of a doji? If they open up positive, they're going to be moving up positive. If they open up positive, where are they? They're out in new territory, out of this resistance level, coming off a kicker signal. Just all the probabilities of owning this stock immediately on a positive open. Where do you want to be back out of this trade? If it closed back down below the head of this candle, because where would you be? You'd be back into the trading range, and that was why when it opened, it told you there was a different story. You were out of the trading range. But PNK, same scenario. There's your best friend right there. Doji gap up. Stochastic still heading up a doji. If it opens positive, you want to be buying, because where are you going to be with that? Probably in the next uptrend. So what is the 10 cents to the downside? So that is 10 cents to the downside on M&M. Yes, I think. Yes, so remember, there are basic rules to candlestick analysis. If we have a kicker signal, which way should this trend be going? Positive, right? If we have a doji and it opens positive, which way should the price be going? Positive. So if those two combinations with stochastics heading up and we open positive, we've got every reason in the world statistically to think we're going up, which means if they close it back down here, that's exactly opposite of what it should be doing. You want to be right back out of the trade. All right, on 11.5, all right, that might 11.5. That might be another 20% from here. I trade below. You can always trade below, depending on the different signals. Now, again, this would be a case where if it traded below early in the day, that was just profit taking. I would suspect it to be moving up, but I wouldn't want to see it close below here. Where would you hard stop during the day? It probably should not be coming back down through the halfway point of this candle. If it opened positive, where is it supposed to be going? This way. If it started backing off down here, what's that telling us? It's telling us that we don't have the strength we should have been getting coming off that candle or coming off that doji. On a doji sandwich, does it matter if the doji is white or black? No, the doji is going to be just a thin, indecisive trading tray or body. Doesn't matter what color the body is because it's supposed to be very small. All right. Any other questions? Did you say that your PCFs for version 7 will work on version 12? Yes. They should, but probably if you understand, if you can just even talk out a formula. For example, if today's open is lower than yesterday's close, and today's close is higher than yesterday's open, you've just basically talked out what a bullish engulfing signal is. And each scanning software has formulas. Today may be O as far as today's trading. Yesterday may be C. It all depends on what formulas they use for today and yesterday's trading. Wicks don't matter on a doji. Well, the wicks are part of the doji, but they don't matter as far as where the open is. If it opened positive right here in the wick, it was still opening positive. Okay. All right. If we don't have any more questions, when Jim does the double line, then you can type in your request for stocks. So, Jim, we're just... Oh, you did the double line. Okay. Whoops. You guys are scrolling faster than I can scroll backwards. So let me reiterate so that everybody doesn't get disappointed on Saturday. Saturday is going to be used for going through the basics of what the basics are for scanning. Then we're going to start going into individual softwares over the next few weeks of which ones or how to set up your scans for Metastock, how to set up your scans for TCNet 2012, how to set up your scans for NinjaTrader, that sort of thing. Okay, this is ultra short. It's in a fry pan bottom, which is going up, which means silver is on its way down, which is what I would suspect. That is a silver trust. This is silver itself. As long as it stays below the T-line. Now, notice your stochastics are in the oversold area. However, if they can't get it back up above the T-line, especially the 50, because if they bring it up through the 50 and fail and take it back down, they're bringing it back down to the 200. GLID is that, I think you're looking for GILD, right? Is that one you're looking for? Okay, again, GLID. No. All right, so you're looking for GILD. That one's so flat that I wouldn't be long or short this one right now. And VNO. This one you stay short until you see a buy signal and a close back up above the T-line. Which means if this one opens weaker tomorrow, you definitely want to be shorting it. So staying short. TLT. The 20-year note, not going anywhere of any great magnitude. The 10-year note, though, it's sagging a little bit, but we're still up in such a top range that these aren't affecting interest rates whatsoever at these zeros. So I would suspect the 10-year note is coming down to test the 200. This one is kind of in a slow sag, but it's not going anywhere in a hurry. As you can see, your stochastics are pretty well flattened out. WLT, this one stays short. Notice your long-legged doji gap down, stays short as long as it stays below the T-line. Oops, you are still scrolling down past me. WDC. Stay short, even though you've got some buy signal here. I wouldn't be buying it until you see it close above the T-line. Remember, anytime you're trading below the T-line and closing below the T-line, you're still in a downtrend. And that's only because the probabilities of you being in a downtrend when you're below the T-line is so much greater. So that's why after an extended downtrend, even with a candlestick signal, you want to see that there's bullish confirmation that you're starting to head back up, and that bullish confirmation is the T-line. LPHI. This one is, as you can see, a slow fry pan bottom. If you buy it, just use a close below the T-line as your stop. Well, Pshaw, let's see. All right, trying to stop the scrolling. LPI. Gale. Gale, another one's got kind of a little flutter kicker type setup here. You can be buying this one, just use the T-line again as your stop. And VHC has been acting strong here recently. This one you continue to hold until you see a sell signal. At this point, with the stochastics coming up, the T-line coming up, and you're getting close to the top, I'd find a spot that says if it came back down through this level, that tells me they're probably coming back to test the T-line, taking profits. That's where I'd take profits, and then wait for the next buy signal once it bounces back up off the T-line. Caterpillar is below the T-line. Now, I'm just doing on these. I know some of these have reported earnings. So this one you stay short until you see a buy signal and a close above the T-line. Apple, where was Apple trading? Down closer to 600. I would suspect they're going to take Apple down and test the 200 before they started back up. Moving averages act as magnets for one basic reason. If you were a major money manager and you were going to buy Apple, would you be buying Apple here, or would you wait to see whether it was going to support on the 200-day moving average? Well, obviously, you're probably going to wait to see if it's going to support on the 200-day moving average and then start your buying. So there's really no major buying going on here. Everybody's waiting to see what it does once it gets down here. So they kind of act like their own self-fulfilling prophecies, which is my big words for the day. This is First Solar. Looks like it's still in a pennant formation. I wouldn't buy or sell this one right now. Notice how your stochastics have flattened out. This one's still working its way sideways. I'd rather pay $27 for this, knowing that it broke out to the upside. MCK. This one gapped up. Now watch for your 45-degree off of here, which would put you in the same trajectory as this top of this uptrend. Okay, Apple's last trade was 609.68. All right. Thank you. And PepsiCo, notice where it started to bounce, right here off the 200. The only problem you have with PepsiCo is if it comes up nicely, you still haven't made enough money percentage-wise to put in your eye hole, unless you're playing a very sophisticated option strategy with it. And AVY. Doji, open positive. If it opens positive tomorrow, you can still buy it. I'd probably just use this open right here. If it came back down through here, there's profit taking going on. You want to be back out of it. Gold. Oops. S.GOLD. Slowly rolling over. I wouldn't be buying this until they can get it above. Now, notice they did gap it up a little bit, but they still have to get it up above the T-line. AMRN. Having trouble here at the 50, which is obvious, which means they might bring it back down to the T-line and then do a T-line crunch to bring it back up through the 50 again. STSI. This one, I wouldn't be long, and you can't short it because it's below $5. So if I own this, unless it does something big tomorrow, I'd be out of the position. But notice you're in a downtrend, you're rolling over again, stochastic's heading down. There's no real great reason to be in that stock. Big bearish engulfing. That's the right one. So if this one opens weaker tomorrow, you definitely want to be shorting it. Orex. This one you stay short until you see a close above the T-line, which you've got kind of a little mild kicker signal today, but it has to get up above the T-line. Now, if it does, now you've got kind of a scoop pattern setting up. If it closes above the T-line, you can be buying. HGBK, one of the banks. This one you can be buying. There's your doji sandwich setup. Perfect doji sandwich setup, because if they open this positive tomorrow, which way will they be moving it? They should be moving it positive. And what's the magnitude? About this magnitude. And if they move it up that magnitude, where is it going? Out past this level, you're in a new uptrend. ARX. Stay short. Yep. Stay short until you see a buy signal and the close above the T-line. Now you've got the little inverted hammer Harami, so now what you have to wait for is a close above the T-line. RSTI. This one you stay short until you see a buy signal. Might have a buy signal going on, almost a tweezer bottom, but I definitely would not buy it below the T-line. Now, there are times when you do buy below the T-line, and that's when it's a good distance away from the T-line. But if you're fairly close to the T-line, that's because it's been acting as that resistance level. Same scenario right here, except notice what's happening. You're flat. I'd put a buy stop up here at 155. If it comes up through there, you know that something has changed and it's breaking out. DGI. Backed off a little bit, but you're still above the T-line. If it closes below the T-line, you come back out of it for two reasons. Number one, because it closed below the T-line, and number two, if they had another down day, this looks more now like it was a downtrending channel versus a J-hook type pattern. FFIV, left-right combo, look what it did today. These are where you get your big moves when you see them heading down and then you see a sell signal. Most of the time, if you see a bearish engulfing signal in the oversold area, it's time to look for a buy signal. However, if you see a left-right combo in the oversold area, look for a plug to be pulled. GDX. GDX. Kicker type signal. This one are a flutter kicker. If it opens positive, you can be buying immediately. SLW. Somewhat positive, but not anything real strikingly positive. You need something more. I mean, you're still in the flat trading area. Just nothing that would get you excited about buying it. Can you identify the difference between a flutter kicker and a kicker? William, I think we did that. Did you get that from before? A flutter kicker is where you've got a doji that gapped up above the previous day's trading. Oh, I'm trying to remember where our flutter kickers were. I'll have to come up. A flutter kicker is when you have a down dark candle. The next day they gap it up above the open of that dark candle, but they only do a doji. Then the next day they open up positive after a doji and go into another green candle. If you took that doji out of the middle, you'd have a kicker signal. And the doji in the middle has some benefits to it. It allows you to get prepared to get in that position. And so we did. I'm kind of hunting through here to see if we see flutter kicker signals anywhere, but I don't see any Apple. Eat. There's that kicker signal to the downside. There's your doji. If this opens lower tomorrow, you definitely want to be short. Flutter kicker, flutter kicker. There's a flutter kicker right now. That's a, sorry, that was a doji sandwich. SRTT. This one, I know people were disappointed. Now, this candle on TCNet opened right about here and came up here, but it was when it came back through the halfway point of that candle that you should have been back out of the trade, number one. Number two, you should have been back out of the trade when it came back down through the T-line. So right now, you should be out of the trade. Notice you've also done a left-right combo again, which means I would suspect they're coming back to at least the 50-day moving average. Then you can start seeing if there's any buy signals setting up. The Qs, same as the NASDAQ, obviously, where they've closed right on the 200-day moving average. I don't think we'll see it move. I say I don't think. The probabilities are that it's going to move sideways, allowing the Dow to pull back and then come back up. So we did Apple, Vetco. Vetco's got the big bullish belt hold. Now it's got kind of got a double doji. Makes this one very simple. If it opens positive tomorrow, you can be a buyer. Then you just want to see it get through the 200-day moving average. Oh, and who was it up there that said they could help fix the convertible top? I need your mailing email address. Let's see, Dan. Ben Franklin. All right. There's your evening star signal. There's your gap down. You stay short until you see a buy signal. I would suspect you're going to see a little bit of hovering, at least on the 50-day moving average. TNA. Stay below or stay short until you see a close above the T-line. Notice how it did the hammer signal, but it really hasn't confirmed yet. So we're not moving up just yet. PFAR. Kicker signal. Even though it has the tail down here, it still told you there's been a dramatic change of investor sentiment. I'd start watching for a 45 degree to come off of here. And KNX. Night transportation. It's a long-legged doji today. However, your magnitude of profits on this one is kind of limited. And you're kind of in a flat stage. I might be looking at this too big. Let's see what it looks like. To me, this is a big fry pan bottom, but we're just starting the upside. I probably wouldn't be trading this one at all. Notice that it's kind of a junky trading stock. So the fry pan bottom is your trajectory, and it's going to take a while. I probably wouldn't even pay attention to this until it got back up to the 200-day moving average, because that looks like where the fry pan bottom started from. BTU. BTU. Now we're going to make it bigger again. It came up through the 200 and the notice how it's staying above the T-line and the 200. This one can still be bought on positive trading, which means your trend channel is still in progress. Let's see, we did LVS earlier. Judy, no problem. Oh, let's see. Linda, if you're out there, I was supposed to call you today and I forgot. I'll try to get to you tomorrow. Kicker signal on Las Vegas Sands. That means your next target is the 200-day moving average. Let's see. The diamonds. Same pretty much as the Dow, but I still suspect you're going to test the 200 before they can get this moving around. SPY, I think, is probably going to support right here at this level because the stochastics are already in the oversold area. And we just did the Qs. So we did silver. Stay short as long as it stays below the T line. S.GLD. Stay short as long as it stays below the T line. We did Apple NTSP. Is that the one that was up $6 today? No, apparently not. This one, the Doji, right on the T line. Makes it very simple. Stochastics down here at the oversold area. If it opens positive, it's going to move in the direction of how they open it after a Doji, which means they're not going to be resisting the T line anymore. You can be buying this one, which would make this a wave one. Notice where the wave one ended when they gapped it up, even though it was a kicker type signal. The next day they told you they weren't following through. So that was the exhaustion at the top. Now they're starting back up again. This could be starting wave three. Google. Not anything that I'd buy just yet, but notice how flat it's getting. I'd put a buy stop up here. If they popped it back up through, they're taking it back up again. NSU. Oops. Nothing there yet. I would rather pay $5 for it knowing that it broke out. Apple, First Solar, let's see, GMSR. Whoops. It's GM. CR. This one we're staying long. We own this one. Notice that it came up, touched the 50, pulled right back to the T line. Now it's going to come back up through the 50 and go through. There's a teeny little gap right here that's probably going to be the first target. NTDOY. I'm not sure we can get that on here. I don't think so. We did TLT. Price line. Stay short until you see a buy signal. CYH. Whoops. CYH. This one's starting to bottom out again. Doji, bullish confirmation. Buy on positive trading, especially if it gets up through the 50. Wave 1, wave 2, starting wave 3. That's a good looking chart. Amazon, did Amazon get hit? I think Amazon was trading down close to, weren't they close to the 200-day moving average? Now, if they gap this down tomorrow, right near the 200, if you're short, that's probably where you want to take some profits. And if you want to be real aggressive, that's might be the time to start looking for long positions. Caterpillar. What is the question? Is this a left-right, or does the second candle need to be bigger and call first? Yes. There's your left-right, is the Doji bearish engulfing signal. This is telling you the opposite is a bullish Harami. So if they open this positive tomorrow, you can start buying because of kind of the double bottom in here. Diana, thank you. Last was 220. Came back off the lows. All right. Let's see. Let me take a gander here. 220. All right. It may still be opening down, and there you may still see some profit taking, but I would suggest the earnings were expected by the smart money from up here. So start watching for a buy signal if they gap it down. The U.S. dollar. I bought the U.S. dollar today. Because it came back, consolidated right to the 20, came back up. It actually closed up here, but they closed it down here based on the 3 hours. But this is where you use the 10-minute chart. And I was buying somewhere down in here when the 10-minute chart was telling me that it was coming up, and then notice that we really couldn't close it below the T line. These are after-hours trades. Stochastics coming back down. So that was a 10-minute chart. That's why I got in. But notice what's happening on the daily chart. Let me make it big enough so you can see what. Is that we've got bullish move, doji. Now we're confirming to the upside on these dojis. I would suspect that it's going to at least come up and test the 50. And might even get through the 50 based upon the strength we have left in the stochastics. Let's see. SBH 13, I don't know. Those are the SBH 13. Is that sugar? What are you looking for? Let's see. Sugar. SUH is, I'm looking to short this one because of the left-right combo right here at the support level, that if they open it lower, they're heading down. And the NASDAQ, that's what you're looking at. Yeah, I think it's going to be supporting right here. Why is the flutter kicker better than the kicker? Because on a flutter kicker, you know what's going to happen the next day. Whereas on a kicker signal, I'm trying to find a kicker signal. Kicker signal is where you have a down day, then they gap it up and they start moving it up. So you're chasing after it. Whereas on a flutter kicker signal, if you see the flutter kicker signal setup, like this, all you know is it has to open positive and you can be buying it. You're already prepared for it. You don't have to be chasing after it. So if this opened positive tomorrow, I'd be a buyer because I know probably we're going to have a positive day. And again, if it was a positive day and you took out the doji, you'd essentially have a kicker signal. SPG. SPG. Let's see. I take it this is one of the REITs. I wouldn't buy it, but I wouldn't sell it. Yeah, I wouldn't. I'm taking it. I'm guessing that it is a REIT that pays a good dividend. Let's see. I don't know whether I can get the SPX over here. No. SPX. No. No problem as far as repeats. I can see them. Dry ships. This one is still relatively flat. I mean, it's having a hard time getting out of this range. Let's see how much. Now you do have the. Whoops. What was that? You do have the prospect that it could come back up to the 200, which would be a decent 15% move. Let's see. Did we? I think we did FFIV, right? Still in a downtrend. Probably even want to go short on weakness tomorrow. And Harry, is that a symbol? Oh. Let's see. SHW. Is that the Shaw Group? Oh, Sherwin-Williams. This one you want to be short. This one they're probably taking to the 200. Kicker type move to the downside. And notice they just closed it back up above the T line. I said, notice that. We can make it big enough where we can all notice it. But if this opened positive, you've been a buyer. But the fact that they gapped it down told you not only you didn't want to go long, but it's probably a good short because it was opening below the previous day's open and opening below the T line. 45 degree is where you have a good strong day. Oh, it might be a day like this, and then it goes 45 degrees off of there, just kind of a steady uptrend. SRPT, we did, I think it was SRPT. Oh, SRPT is different. No, that's this one. This one you don't want to get back into until something happens here at the 50. Was gold a pillow top, dumpling top? Pillow top, dumpling top. Dumpling top, yes, as long as it stays below the T-line. I wouldn't be going long. It needs to get above the T-line, which breaks the trajectory of this downtrend. Now, that is a good, strong signal if it breaks the trajectory, because we know this is a strong move as far as investor sentiment, that when they start breaking this down, investor confidence is bad, means they're going to take it down hard. To break that syndrome means there's a lot of strength there. That means that next price move should be fairly strong. AP, or Apple had the SMA drop down to 585 that Stephen predicted already in after hours. Then it bounced. It can still pop or drop tomorrow. Yeah, it probably will drop because you got to remember, not very many people are trading it after hours, percentage-wise. The big money will be in trading it first thing in the morning. That's what will tell you what's happening. SDS, this one on the short basis, looks like it's starting to turn long. So that means things might be starting to pick up to where. These are the shorts. Yeah, if the market starts moving positive, this will start heading back down again. DAC. Bank of America just can't get out of its own way. This one, closing below the T-line, you should be out of it. The best right now is to watch to see if it comes back down to the T-lines. LQDT was something. Oh, a good kicker signal. That's a good chart for tomorrow. Let's see. Anyone know where I would find videos of these free seminars? Yes, they're on the website. Looking. Jim, where would they? You're answering him. Okay. Thank you. MasterCard. Whoops. Milk. MasterCard. Notice the evening star type signal, close below the T-line, stay short until you see a buy signal. Now, you're not quite to the oversold area, but you're sitting on the 50, so watch to see whether they hold at the 50 or not. If they do, they're probably going to bobble it for a few days, letting the stochastics get into the oversold area before they can start taking it back up. Costco, did we do Costco? This one you can be buying on positive trading. Just be careful of what your magnitude of return is on this. CPE, that's copper. You probably want S.CPE. This one down on the 200, you're not quite in the oversold area yet. I'd watch it to see if it kind of does a scoop type pattern. Notice the flat handle in here. See if it does a few days of flat trading and starts coming back up again. Okay, the 45 degree is usually something that after a big strong price move, then they move it off into a steady uptrend. Radio Shack. Radio Shack had that big bullish engulfing. Now it's done a double doji. Makes this one very simple. If they open this positive, especially if they bring it up through the 50, you want to be buying. They'll probably at least bring it back up to test this level right here. Okay, thank you, DSOP. Julie, thank you, and thank you for her cards. I think she sent you a thank you card, which I deeply regret because I can't read my mother's handwriting. It looks like chicken scratch. Looks like wee little teeny chicken scratch. And then she tells me my handwriting's bad. What if a kicker is formed by the investor sentiment of just one institutional's large volume, one day? Yeah, unfortunately, you're just telling them now what if. Now, there is a what if with a kicker signal. If you see a kicker signal forming because somebody has done an upgrade or a downgrade, that does not have the same effect as a kicker signal as if something had fundamentally changed the thinking of that stock. I profess people not paying attention to upgrades or downgrades because all they are is 1 or 2 day aberration in supply and demand. You'll find many, many times that if there's an upgrade or a downgrade, it affects the stock for 1 day, and then the next day the trend continues to move right the way it was. And on top of that, I don't think there's an analyst on Wall Street that I would even listen to as far as an upgrade or a downgrade. They all can recommend stuff completely backwards. Did we do Amazon? Yes, I think we did Amazon. Amazon was trading down low, but now it's trading right around the 220 level. But that's after hours. So you're going to have to see what they do with the big money once they come online tomorrow. COG, this one, if it opens lower, you want to go short. You're not quite in the oversold area yet. And AIG. AIG, also want to go short. No, you don't want to go short. This one you just don't want to buy until you see a close above the T-line. But if you cannot monitor the trade intraday, kickers may be a greater risk reward than you want. Well, yeah, but you have, unless you're sitting there and you get into the kicker, the probabilities of a kicker moving in the right direction after you buy it is usually pretty strong. That's the whole basis of the kicker signal in the first place. They do fail occasionally, but the probabilities, let's put it this way, for every time you get into a kicker signal that fails, you're probably going to get into 30 kicker signals that make you good money. Your comment is a fine reminder. All right. Did I forget to do Appy? Appy just went out into Never Never Land somewhere. Appy. I'm sorry, Bren. That's the Appy. As long as it stays above the T line, you stay with it. As you can see, they did touch the 200, but now you might be having a slow T-line crunch that will bring you back up through the 200. COF still earns you a lap. This one, as long as it's in a slow, steady uptrend, you stay with it. As far as a trader, it doesn't have the fluctuation to be a good trader. As long as for a long-term hold, continue to hold, as long as it doesn't close probably below the 50. That seems to be the support level. Let's see. Do price levels after hours count? Not really. If you're, you might be, prices move around after hours on maybe a few thousand shares. Now, on something like Apple, there might be quite a few thousand, but it's still going to be minuscule compared to the volume that's going to trade during the next day. SVU is still a very nice looking chart. Now, notice what we have here, a scoop pattern breaking out. And once they took their profits, they told us the profit taking is over. This one I would still be a buyer of without any apprehensive tension on a positive open, and I just use the halfway point of this candle as my stop. That's a nice looking chart. It's doing exactly what a scoop pattern should do, is the slingshot effect to the upside. What is the difference between a flutter kicker and a doji sandwich? A flutter kicker is a dark candle followed by a gap up doji above the open of that dark candle, and then the next day a bullish candle. Whereas a doji sandwich is a green candle followed by a doji followed by another green candle. The flutter kicker has the candles on each side of the doji different colors. Let's see. SWI. All right, we got it. SWI. If this one opens lower tomorrow, you start shorting it. That's a belt hold bearish engulfing. Okay, we did price line. All right. Okay. Thanks, Julie. Okay. Yeah, that's why you want to know what your patterns are. Once this did the bullish engulfing signal, what do we know about dojis? Is that convincing selling? Not really. So we got some profit taking going on. Now if it opens positive, the profit taking's over, you'll be in good shape. Best if there's no discrimination. No, usually kicker signal is because of news that has the effect of changing the perspective of that company. Now, an upgrade or a downgrade doesn't change the perspective of the stock price. All it does is create a little bit of imbalance for the supply and demand for that short period of time. If they announce much better than expected earnings and it does a kicker signal, that's because now people are looking at it with a different perspective. If something happens worldwide where their services are going to be much more marketable, that's changing the investor's perspective. So it's usually news that creates a kicker signal. All right, just a few more here. NTWK, that's a nice little J-hook pattern setting up. Make sure your volume is good, but notice the doji's bullish move. That's a good looking chart. Okay. Genome. That's your fry pan or your dumpling top. Unfortunately, you can't short this because it's below $5, but it's definitely telling you you don't want to be in it. So the safest thing to do is if it opens lower tomorrow, you're out of it. Just put a buy stop up here. If something happens big, you'll catch it on the move up. TC, whoops, S.TC. This one, same scenario. You don't want to be in it, but you can't short it below $5. WSH. Whoops, S.WSH. As you can see, they've stopped the selling. You can buy on positive trading after the doji. Just be careful when it hits the T-line. That's probably going to be your first resistance level. Oops. That's exactly what you said. If it opened positive, you would expect the pattern to completely back. Yeah. Oh, you were way ahead of me, Robert. What setup do you end up trading the most? Stan, we're concentrating right now on the doji sandwiches because there seems to be a lot of doji sandwiches going on in these market conditions. Next month, it may be fry pan bottoms, and next month after that, it may be J-hook patterns. So, what makes my job fairly easy is we could concentrate on what signals are occurring right now and train people on what the investor sentiment is that creates them. Because that's the powerful aspect of candlestick analysis, is not only do you recognize the patterns that the Japanese race traders have shown us for 400 years that reoccur in investor sentiment, but they also told us what the investor sentiment was that created it, and that combination gives you a very powerful analytical tool as far as being able to understand why the markets move as they do. FIV, that was the left-right combo, gap down. Wouldn't do anything yet with it until you find out what they are going to do with it down at this level. Let's see, S.PCS. Stay short until you see a buy signal. MWW. Stay short until you see a buy signal. It's very simple. A nice rollover. The bigger the signal, the more probabilities that afterwards is going to be moving in that direction. Look how huge that bearish engulfing signal was, and then everything was weak after that. Even though they tried to bounce it one more day, and you had a bearish harami that told you the buying had stopped, everything since then has been downhill. Let's see, RVBD closed just at the T-line today. But notice your stochastics are in the overbought area. You're coming off a very strong, almost kind of a double flutter kicker. If you took these little dojis out, you'd have a kicker type signal. So I'm holding on to it one more day, but I need to see it open positive and trade positive. If it opens lower, closing out the position. Now, why didn't we do it on the close? More than likely because of the strong price move. This is just profit taking. We don't know that for certain, but we know there was a strong buy signal here. So the probabilities are that we're in an uptrend. So I'll give it one more day. Versus closing it here. If it opens lower, all right, I missed out on another 20 cents that I could have had. But again, the probabilities are that it's still in an uptrend. PPP. That sounds like my nighttime activities after I get in bed. This one, you're obviously on the T-line. Not doing anything. I would put a buy stop at 8. If it came up through 8, you could be a buyer then. But right now, it just looks kind of dead until something else happens. Is this a buyout? Something? It's trading so flat. Potash. This one you stay short until you see a buy signal. MOS, you stay short. Oops, you wanted MOH. I think you wanted MOS, didn't you, Albert? Do you see the same future pattern in futures? Yes. Remember, candlesticks were developed by the most basic of all commodities in the world, rice. And the Japanese rice traders made fortunes. Not fortunes, but legendary fortunes. They made so much money just trading something as conservative as rice. Where's the left-right combo in FFIV? Right here. Doji followed by a bearish engulfing signal. That's your strongest sell signal. There's a Doji followed by a bearish engulfing signal. That's your sell signal. Starbucks. This one still has to close above the T-line to go back after it. Notice how it closed right at the T-line indecisively. That means it can go either way from here. And tomorrow's open will tell you which way they're going to go. Okay, I'll try MOH. You were right. I was wrong. But that's a weird-looking chart. You do have a left-right combo. There was kind of the doji type day, followed by a bullish engulfing signal right at the same level. It bottomed out before, double bottom, gap up. Shows you good strength, profit taking as soon as they hit the 200. Still some profit taking. As soon as you see a bullish candle, you can start buying. That tells you the profit taking is over. GDI. Woo. That one is a nice one. That one, I would suspect you're going to have a 45-degree come off of there. If you're buying, you probably don't want to see it trade back below the 200-day moving average. And Lee, that's as flat as a pancake. If I owned it, I wouldn't own it. I'd be out of it and then just put a buy stop right here. If it comes up through there, something's happened. HFT. S.HFT. I don't know what HFT is. Okay. Not a stock. I mean a large green candle. Okay. Oh, high frequency trades. All right. All right. I guess that's it for tonight. Let's take a gander here at the market one more time. Still think they can bring this down, even if it's a hammer type signal where they bring it down, touch the 200, and bring it back up. That tells us they finally reached the target, and then you can start looking for buy signals. Okay, thank you everybody for showing up. Again, Saturday is going to be just kind of giving people the basics of how to set up their scans, how to do kind of a market analysis of which way you want to be doing your scans, whether you want to be long or short or both. And then just kind of using formulas to show how to do the basic scans. And again, I'll use TCNet since that's the one I'm most familiar with. But then over the next couple of weeks, we will be having people coming in showing the different scan techniques for candlesticks, Metastock, NinjaTrader, TCNet, all of them, just so you can improve what you might be doing so far with what you got. So, yeah, I don't know if they'll be on tonight, but we'll have the recording up tomorrow. All right, everybody have a good evening. We'll see you in the chat rooms.